You know what time of day it is. It's time to get back to work here. It's about that time of day again here, folks. It's Thursday afternoon. It's September the 12th, 2019. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, in case you're here for the first time today, my name is Joseph. My friends call me JJ, and I help traders find high-quality trade setups using a very simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight's a little bit different. My job tonight is to identify the best levels of support and resistance, the best entry and exit points I'm watching for tomorrow, and most importantly, how to avoid all those traps to keep all the money you've made here this week. We're going into Friday's trading session. We'll get a lot to cover here tonight on the video. We get some rollover and some major news tomorrow, and of course, we'll grab all the charts, the crude, the S&P, Nasdaq, gold, and we'll wrap up on what was really a mighty euro in tonight's video newsletter. I'm going to jump in here first, though, to oil, the black gold, the Texas tea, because I'll tell you, oil is still bearish, but I can smell there's something in the air right now, right, that's telling me we might be seeing a short covering rally coming tomorrow morning. Let's jump into that black gold, that Texas tea, and let's get this party rolling here this morning or this evening here on this nightly newsletter. Now, of course, as you saw, right, we saw that big, strong breakdown here. OPEC, of course, talking about production cuts in the pre-market this morning. Market takes a tumble going lower, but look what happened. Anytime you see a strong move in one direction, what do we expect? We expect to see another leg, and oh my goodness, they failed. That higher low now, as we kind of joked around last night on the gold, what is that called? It's a support trend line. It's bear repellent, right? It's like bear spray, right? That rising support trend line now tells me these sellers are really going to have a hard time, right? Because how do you sell this market when you've got that rising support trend line now? So the emotions going on with the sellers right now are not going to be very positive. Along with that, you've got these bears, right, that are now looking at this rising support. Bottom line is we know we're bearish. We're not quite bullish yet, and we'll talk about why we know we're still bearish here in a moment. I'd like to see if I can get these sellers. They've already tried once. You know me, I'm a big fan of the two-try rule. I'd like to see them try twice here and be a buyer now coming off the low of what really is a kind of a hidden channel or a bull channel, or some folks might call this a bull flag. Now, I've got two, maybe three different specific entry patterns I'm looking for to buy off of that low. We'll talk about that obviously in tonight's video. But then also too, the market could easily slide higher here with that short covering rally I mentioned earlier. And I've got a couple patterns here, two specific breakout patterns to keep your eyes on tomorrow as we go higher here as well. We'll talk about buying low. We'll talk about buying up that breakout. I'll also talk about what it's going to take here to be a seller on this market as well. We're going to break all of this down into small bite-sized pieces here for all you crude oil traders tonight. Over on the S&P, of course, is bullish. We talked about this last night. We're expecting this to be a range-bound day today. That's exactly what we got. Most important thing right now is we get a bull market into a trading range. I've got my expanding triangle, right? My higher highs, my lower lows, and ultimately right now we know we're bullish. I'm looking to be a buyer at a level of support, and I'd like to be a buyer down off of that low. Now, of course, it all depends on the type of pullback that we see, but I've got three different entry patterns I'm watching for here to buy off of that low. I want to be a buyer off the low here on the S&P. We'll talk about the specific entry patterns I'm looking for here in just a moment. We'll also talk about how to avoid that middle. That's where most of the losses will come tomorrow, and what to do if the market tries to break higher. Got a lot to talk about tonight on this Emini S&P. Nasdaq is similar to the S&P, but we have some very big differences. We do know we are bullish here right now on the Nasdaq. You'll notice though the Nasdaq not only has a range, but it also has a spike and channel. Now, if you watch my nightly newsletter every evening, then you know me. I love me some spike and channel patterns because they give me such great information as far as where I want to be a buyer here tomorrow. I've got my buy zone down around that big round number at 7,900. We'll talk about tonight the specific entry setups I'm looking for to be a buyer on this. And of course, also too, right, what if it collapses lower? What if it does turn around and go lower, I'll talk about what I'm looking for tomorrow morning to qualify the breakdown, to qualify the breakout, and everything in between. So Nasdaq's looking good here for tonight's video. Over on the gold, boy, big run up. Does that look familiar to you guys over there? Does that look familiar over there? One try, two try, trap and go. Yeah, we'll talk about that on the oil. But as you can see, the same basic type of pattern we saw on gold, obviously yesterday into this morning, is very similar to what we're looking at on the crude oil. I don't want to give away all the tricks in the video tonight, so I'll make you guys wait for that. So we're looking at something similar there on the gold, on the crude oil. But what's up next on gold? Up next on gold right now, we know we're bearish. Anytime I'm in a bear market, I want to sell at resistance. I've got a couple levels of resistance I'm looking for overhead, top of the channel, up inside that battle zone. I want to be a seller, but as you can see, I've got one big problem. That same trend line that we drew last night, it is still impacting us right now. So let me ask you a question. What is the best pattern to help you avoid selling into support? We'll talk about that one pattern I love to use, right? That pattern we'll talk about tonight on the video as well. We'll also talk about if this market goes lower, we might get a chance here to use that trend line as kind of the underbelly, right? As a resistance level here tomorrow as well. So I'm looking for to be a seller here. I want to be a seller off that resistance area. I've got a couple key patterns to talk about tonight on the video. I'll also talk about how that big strong run up might just have these buyers retesting that high tomorrow as well. That would be wonderful, but right now we're way too bearish to call that bottom. I'll talk about 2, maybe 3 different patterns to look for to qualify the reversal first and then profit from it on Friday morning. Last but not least here, over on the euro. The euro, of course, you can see here is quite bullish as we're going higher here. Now the euro, another very interesting situation here. We've got a bull spike in channel. And of course, you know me, right? Spike in channels, some of my favorites. I love me some spike in channels because they give me such great areas of support. I'm watching that 10-200 area. Now that's going to be a very deep pullback. And you know my rule is anytime I see that deep pullback, there's one very specific setup I'm watching for. Maybe 2 depending on how the market pulls back. But one pattern to definitely keep your eyes out on that tomorrow. I can also see here too, we've got this little tiny trading range. So if we can get stuck inside this range here, I'm going to talk about tonight how to use that gap that we see there at 10,500 in combination with that trading range. Got a lot to cover here for this euro. We're going to look to buy low on the euro. We got 2 simple patterns, range and channel. With that gap really helps put the pieces all together and really give us a good formula for success tomorrow on that euro. So we're going to buy pullbacks on the euro. Looking to sell the rip on the gold, buying Nasdaq, buying S&P, and trying to be a buyer on that crude oil for tomorrow. However, before we jump into the video tonight, before we put all the missing pieces together, I just want to remind you guys to make sure you join our mailing list. You know, just before I publish this video every evening on our YouTube channel, I send out an email to everybody on our mailing list. I want to make sure you get that email. That way you know every time our nightly newsletter goes live. It's very easy. All I need is your name, your email address. Hit that subscribe now button, and don't forget, once you subscribe to our mailing list, your job is not over, guys and gals. You've got to go in and check your email inbox. I'm going to send you a welcome email, and inside that welcome email, there'll be a verification link to verify you got the email. Also, there's a bunch of great free resources that I'll send you as part of that welcome email so you and I can get the most out of our time together every evening on this video newsletter. Also, once you join the mailing list, drop me some questions in the comment section below. I'm always hanging out down in the comment section below. I love answering all your questions. Maybe you have questions about the charts we're talking about, right? The strategy we're using. Whatever questions you have about today's video, drop those questions in the comment section below. And while you're down there, guys, dropping those questions in, hit that thumbs up button for me, because I'll tell you, every time you hit the thumbs up button on YouTube, it helps to expose this video to more people who really want to learn this great strategy day trading changed my life. It's changed thousands of my clients' lives. I want to expose this knowledge to as many people as possible, and I need your help. So hit that thumbs up button. Drop me some comments if you have any questions in the comment section below. And don't be afraid to pick up the phone if you're not somebody who wants to chat in the comment section. Don't be afraid to pick up that telephone. Call me in the office. I'm always here. It's a toll-free phone number. Call that number 24/7. When I'm out of the office, it'll forward to my mobile phone. Very, very easy here to reach out and ask for more information. We get a lot of calls to the office every day. Right, lots of questions about joining our free trading classes, our free pass to our trade room. So if you have any questions, right, you don't want to post in the comment section below, please feel free to pick up that telephone, call that toll-free phone number, or use that live support tool in the upper right-hand corner. In the meantime, though, make sure you join the mailing list. Dump those questions in the comment section below. Hit that thumbs up button, and let's get started here in tonight's video. Tomorrow, finally Friday session, rollover session. Right? Tomorrow's going to be an interesting day tomorrow. Now, we got a lot of markets rolling over tomorrow. We talked about this last night on the newsletter. We're still kind of watching and waiting right now to see if we're going to get rollover on the E-minis and the Euro. But it does look like the S&P and the Nasdaq are just kind of teetering right now between the 9.19 and the 12.19 contract. So don't forget, right now the current front month is the 09.19 on the S&P futures, Nasdaq futures, Dow, right, all the E-mini futures, as well as the Euro futures or any currency futures for that matter. As of tomorrow, what you want to look at is the volume greater on the 12.19 contract, right? These roll over every quarter. We're almost towards the middle of September, which means this contract's going to expire here at the end of the month. We want to roll over here before that contract expiration. Now rest assured, I teach everything about contract expiration and contract rollover in our beginner classes here at School of Trade, but it's actually very, very simple. Once that volume is higher in the 12.19 contract, just make the move from the 9.19 to that 12.19. And tomorrow morning, we'll be doing it in our trade room like we do every morning, so don't forget to come join us at the opening bell and do it with me. Now, speaking of the opening bell tomorrow morning, right before the markets open tomorrow, we got retail sales at 8:30 Eastern Time. That will definitely be a big market-moving event for markets like Amazon, right? We know that retail sales, things like, of course, right, for Nasdaq, we know that retail sales number tomorrow will probably affect, companies like Amazon, right, and different online retailers. And so we do assume that Nasdaq will be a big mover tomorrow morning in the wake of that retail sales number. So keep an eye on that tomorrow morning. That will definitely be our big market catalyst tomorrow. In addition to that, remember, don't forget, we heard a lot from OPEC. Here this morning, we heard about the U.S. and China trade talks, and of course, we're still kind of waiting and listening in about the FOMC, right, and of course, rates. There's a lot going on right now in this world of ours, right? Even though there's not a lot on the calendar tomorrow, we've got the retail sales number at 8:30. That will get us going, but definitely keep your eyes and ears open for headlines regarding OPEC. Today, we heard from OPEC talking about production cuts. That's, of course, some bass-ackwards, right, reason why the price dropped. Don't ask me why the market responded that way. It's a good example, though, of why the news should not be taken literally, and you want to see the news comes out, wait for the market to respond, and trade the response to that news. But we heard from OPEC this morning. U.S. and China, of course, we heard from today as well, right, twittering back and forth, right, whatever the hell they do these days on the tweet storms, and, of course, the FOMC rates, right, we know we're listening in for that, too, as well. So a lot of stuff going on out there. Might not be scheduled, right, but we'll definitely keep our eyes open on that and ears open for headlines that may be market-moving events tomorrow as well. 8:30 retail sales, rollover day tomorrow, most likely on the S&P, Nasdaq, and the Euro. And, of course, it is a Friday, and Fridays always tell us to be early in, early out, make that money, get out of there, right? Get out of there with all your fingers and toes. Enjoy the rest of the day, right? I always tell my clients, you've got to have a good reason to be trading after 11 o'clock, 11:15 on a Friday morning. So on our best behavior tomorrow, early in, early out, make that money, enjoy your weekend, and we'll come back and do it again, right, on Monday next week as well. Don't forget, guys, every morning, Monday through Friday in our trade room, we trade the strategy together. Let's put that strategy together here right now, shall we? Jumping into our charts here tonight. I've got some crude, S&P, Nasdaq, gold, and euro. Let's start off first with that black gold, that Texas tea. As I mentioned earlier, right, we heard from OPEC talking about production cuts here this morning. Don't ask me why production cuts would lead to a market dropping like that, but this is a very good example, like I mentioned, of why I don't take the news literally. I let the news come out, I wait to see what the market will do in response, and I trade the response. Because you got to remember, when news comes out, a lot of times it's today's news, but they're also talking about revisions from the last news event. So there's a lot of wrinkles, there's a lot of complexity to these news events, especially these days, right? The days are over where the news sounds bullish, so you buy it, right? These days, it's bullish. Is it bullish enough? It wasn't bullish enough, and therefore it drops, right? It's a very complicated, right, strategy to trade the news. Most people are going to have more success with news trading by understanding that when the news comes out, let the market respond. In this case, the market responded bearishly, and you're following it down from there. Now, like I mentioned earlier, we have this big, strong move down, and anytime you see this much strength in one direction, you're thinking they're going to definitely get another leg. But look, they failed, and that failure, that higher low, now puts a whole new spin on this market. That creates, obviously, here this rising support trend line. Now, I found that rising support trend line, by the way, by drawing off of the highs first. I like to use these kind of hidden levels, right? If I want to find a resistance level, if I want to find a support level, I draw a resistance level first. Then I use that resistance to find support that matches up. It's a slightly more advanced tactic that really has some really great reliability to those levels. The problem we have right now, though, is the bulls haven't quite taken control yet. How do I know that? Because what do we need when a bear market to reverse? What does a bear market need to reverse? For a bear market going lower, what do we need? We need that 1, 2, 3 reversal. So imagine the moving average coming over, right? We got to see a market go above the moving average, pull back, and jump off that moving average. That's the only time. And the way that I teach it is you got to create some separation, right, off of the moving average. There needs to be some separation as we come off the moving average. What you don't want to do is go trying to call this a reversal, right? This happens a lot, where it'll grind. That is a very common scenario, right? You're probably shaking your head going, yeah, this happens all the time. This is not a bull market yet. That's a bear market. The sellers are holding back those bulls. Now, the minute that those sellers give up on this and the market jumps, well, yeah, now we have a jump. Now we have separation away from that moving average. Now, my way of simplifying this is to say, I want the 1, 2, 3 reversal, right? I want to see it go up, strong move up, hold the pullback, and jump off that moving average. Okay, so look back at the chart now, and you can see for yourself, the sellers obviously have control. The buyers got this big shot back higher. They couldn't hold it. They had it on a silver platter. In fact, I was talking smack to those buyers this morning going, are you kidding me? You let this slip right through your fingers. The buyers had it. They could have easily run this thing right back up to where we came from here this morning, but apparently the bear's too strong. So the buyers couldn't hold it there. They go back and they retest. Again, they try to retest the low. They don't get that retest. Now the trend line comes up. Now, show me the point where the buyers jump. I don't see it. I just don't see it. So I think the bears still have control of this market right now. Okay, we go above the moving average, but we're not getting the separation. And trust me, a market that goes this far in that short period of time, when it reverses, it's going to blast higher, right? When this thing reverses, it's going to be a strong move higher. This is not a reversal yet. So unfortunately, I do want to be a buyer on this because I think the options for the sellers right now are really limited. However, I really have a hard time being a seller until we can see a couple very simple patterns here. First of all, I want to be a buyer on this, right? I want to be a buyer on this. I'm looking for some support levels here. I've got my support levels marked up below. I got my trend lines marked up. I'm anticipating this is going to be a seller's market. What I'd like to do is I'd like to see these bears get up top, try again, and then buy off of that low. Okay, that's the overall strategy here for tomorrow. I want to see this market go a little bit higher, get that second try, and then try to get those bears to pull it back and run this thing going higher here again. Now think about the entry pattern that we can use on this. I've got my areas of support here. What's going to be a good entry pattern? Well, if I run lower here, what's going to happen? The moving average will come over. The sellers now will try to sell off that pullback. And when they do, they leave themselves exposed for a stop run. Remember, rising support here. Very difficult to sell into that rising support. Not impossible, but the probabilities are not very good for those bears. Knowing this, as soon as I see those sellers sort of sell off that pullback, now I know exactly where their stops are. Now I know where their pain comes in. Now I know where the rookie sellers who aren't paying attention to that rising support trend line, now I know where those rookies, because we all know that rookies like to use small stop losses. We know where those stops are going to be. They'll be right above that high, and that's where I want to be a buyer into those stops. So really the ideal scenario here on the oil, we know we're bearish. I'm looking for another attempt here for those sellers. That'll be the second try. Get down around that rising support. Look for that seller failure pattern, right, into a pullback combination. Okay, oftentimes these seller failures, they'll jump up above the moving average, then they'll pull back, and we can buy that pullback from there. So if we do have the luxury of getting that pullback, I'm looking for a failure into a pullback pattern combination, going back up to retest that high. Now, what if we don't get that pullback? What if the market runs higher here? A lot of what's going to happen here has to do with what happens when it goes higher. You know, for example, if it runs higher and starts grinding higher like this, I'll treat this now as a spike in channel, and I'll look for a pullback, a failure, and the same thing. Okay, so if we do grind, right, if we kind of grind up the top of this channel, at that point, what I'll do is I'll assume now these buyers are holding. I'll look for that seller, right? I'll look for those bears to try taking it lower. We'll talk about spike and channel patterns here in a moment. But if it grinds higher, right, grinds higher, it doesn't jump higher, but grinds higher now, I'm looking for that again, that seller failure pattern into pullback, going back up to retest those highs. Now, what if we jump higher here? If we jump higher, there really are two patterns I'm watching for. One is the FOMO breakout, very strong move up. Now, because of this range here, this range, of course, coming from last night's newsletter, because of that range, if we do see that break higher, I'm looking for one try from the bears, two try for the bears, and I really want to avoid buying into that range. And my favorite pattern to avoid buying high is a trap low. Now the key to this is, right, I want to look for those sellers trying twice here. The first pullback is profit taking. The second pullback are the actual sellers coming into the market at that point. I want to wait for those bears to commit. Once they commit below that low, nice strong signal candle, and we're buying as the market rallies back up to retest that high. Hopefully that makes sense for you. Now, two patterns here. Here's the second one. The second one's going to be a 1, 2, 3 breakout. Okay, so for example, let's just say, for example, here that we have that rally higher here, and we really jump off that moving average. I'm going to mark up this high. I'm going to mark up that low and look to buy off that hidden channel. Now, who knows? Maybe we get lucky, and maybe we get a chance to use that trend line, right, as a little cherry on top. That'd be wonderful. Not required, right? Definitely not required. So if we do see this thing jump, okay, then obviously we know we've got that separation. Mark up that high, mark up that low. This creates like a spike in channel pattern, hidden channel, and again, we're buying off of that low. Now, one thing I'm definitely concerned about tomorrow is if we run back up and start going sideways inside this range. Okay, at that point now, how do we trade that? It's bullish into a range. The best pattern for trading ranges is a failed breakout pattern. Most breakouts fail in liquid markets. Oil is very liquid. One try for the bears, two try for the bears. I call that a failure pattern. I love breakout patterns, but not the way most people would trade them. When somebody asks me, what's your favorite way to trade a breakout? I always tell people, I wait for a breakout pullback, and I buy right into their stops. Most breakouts will fail. Most breakout pullbacks will fail. I know that when it goes against a trend like that, again, wait for the breakout. Let someone else take the breakout. Wait for the pullback, right? You know what I mean, right? The pullback to the moving average. People love those breakout pullbacks. Supposedly, it's more reliable than a straight breakout. I never saw that, right? So I've never seen reliability with breakouts. But a breakout pullback pattern off the moving average, find those stops, and we're buying right into those stop losses. All right, guys, looking good here. Now, how do we sell this market? This is going to be the challenging one, right? This is the challenging one. How do we sell this market? Well, first of all, in order for me to be a seller, I've got to get back up around this 55.31, right? I've got to get that 55.31. Now, at this point, I've got to worry about that trend line. So what's the best way for me to avoid selling into the rising support? A trap high. One try for the buyers, two try for the buyers, trap high, and sell back down. Again, I want to get up above that 31 level. Once I'm above the 31 level, now I can qualify this as 1 and 2. Once I have it, let the buyers now try to buy once. Let them try again. And the reason why I want to see those buyers try twice is because I can smell a reversal right now. And I'm sure a lot of other people can do the same thing as well. People are going to try to pick that top. They're going to try to pick that reversal, right? I'm going to let them try once, let them try twice, and then sell it right down into that, again, into the low of that channel, runner target, down to the reach that 54.01. So not the easiest of sell setups, right? Not the easiest. Again, I'd like to get that failure into that pullback combination coming off of that low, right? If we do grind higher here, right, watch that as a spike in channel and trade the trap low. Or is it a 1, 2, 3 jump? That jump off the low, that creates separation, mark up that channel, buying off the low of that channel. Or is it a step up, 1, 2, trap, right? That's called a 2-try breakout, that FOMO breakout pattern. And again, the sell setup, up, 1 try for the buyers, 2 try for the buyers, trap, trap, trap. Why trap? Because you've got that rising support. What you'll find is the only way to really sell this will probably be some sort of trap high here. All right, guys? And don't forget, all of these setups, I teach all of these entry setups inside of my free trading class. So if you're here for the first time today and you want to get a deeper dive into all of these setups, the failures, the pullbacks, the traps, even my strength patterns, make sure you grab that free trading course. It's linked up in the upper right-hand corner. I'll also put a big red button for you right below the video if you're on the blog at Sideways Markets. So don't delay. Grab that free trading course. If you're serious about your trading career and you want to learn my 4 favorite patterns, learn my 3-step strategy, I'll also send you an invitation to join the trade room on a free pass. Grab that link in the upper right-hand corner. It's always linked up in the description of the video. It's also right below the video tonight on the trading blog at Sideways Markets. Looking good. Oil's looking pretty good for tomorrow. Over on the S&P. Now again, the S&P is a rollover market for tomorrow. I'm on the 919 right now. We don't have confirmation yet, right? We don't exactly have that confirmation yet for rollover. If you look at the rollover, the market analyzer right now in NinjaTrader, you'll notice here that we've got the S&P is still waiting on rollover. We're still very much right in the 919 contract right now. Same thing on the Nasdaq. So we definitely are not rolling over yet, but we are watching it closely here, right, as we go through the rest of tomorrow's trading session. Once that 1219 contract is more volume, we'll roll over right to that 1219 contract. So keep it in mind. The chart might be different tomorrow on the 1219, but the same fundamentals will be there. We got a bull market right now. That bull market, of course, runs sideways here inside of a trading range. That sideways trading range with a bull bias tells me I want to buy underneath that trading range. You know, anytime we have a range-bound market, range-bound markets are balanced. They tell me to buy low, sell high, and avoid the middle. So I want to buy low, I want to sell high, I want to avoid the middle. I'm using the size of that range right now to find my buy zones and to find my sell zones. You'll learn all about that stuff inside the trading classes here at School of Trade. But the most important thing, though, is I know we're bullish overall. I want to be a buyer. I want to buy at support levels. So I found my support levels below. right? That 3,003 down to that 29.93 or so. And of course, I'm also drawing in a trend line down here that can also act as support. Same thing overhead, right? That resistance trend line overhead. These create these kind of inverted triangles or expanding triangles. These are really reliable areas because they allow you to pick the tops and bottoms in these range-bound markets. Remember, range-bound markets are the opposite of a trending market. Trending markets, you don't want to go anywhere near picking tops and bottoms because trending markets are on a mission, right? They've got a momentum behind them. On a range-bound markets are balanced. They're happy right where they are. So we're buying low, we're selling high. Our job is to pick tops and bottoms on range-bound markets. We do the opposite of that on a trending market. We'll talk more details about that in our free trading class that I mentioned earlier. How do we trade this for tomorrow? Most importantly here, I want to be a buyer. Now, a lot of this has to do with how the market pulls back while we get that, the way the market pulls back, the way it pulls back will determine which entry pattern I want to use here for tomorrow. For example, I know I got my trend line here. Now that trend line coming down, if I can get a run down to that trend line, it's not a very big pullback. And so because of that, I can look for my favorite setup in a range-bound market, which is a failure pattern, and of course, buying right into that breakout pullback, right? And this is nothing new. Okay, you'll see an example back here as well, right? Strong move down, the bears try to sell the pullback, and people are buying right into their stops. Now the key here is I want to get outside the range, get down into support, get that moving average coming over. Get this a little bit wider here, right? Get that moving average coming over. And again, let the rookies try taking those breakout pullback patterns. Most breakouts fail. Most breakout pullbacks will fail. In a bull market, the odds are not very good to be a seller, especially at the lowest part of the daily range. We know now where the stops are. We know where the pain point is for those sellers. We know those sellers are rookies. They keep nice tight stops, and we're buying now right into those stop losses for that rally going back up to retest the high. But what if we really get a nice pullback? What if it really jumps lower here? Remember, it's got to hold the pullback to be called a bear market. So what if we really dive deep here? Then what do we do? Well, now at this point, all of that momentum for the bears, we have to give the bears the benefit of the doubt in that situation. And because of that, I'm going to use a slightly different modified failure pattern. I'm going to wait for the bears to try twice. Once, higher high, twice, and then we can go up and buy from there. You know, think of it this way. If we have if it's a relatively shallow pullback, again, I mentioned like this one and this one, right? Shallow pullbacks below the range, you can get pretty aggressive, right? Once the bears try to sell that breakout pullback pattern, just buy right into their stops. But if this thing really runs lower here, now you're going to have a lot of sellers that will try to use that, right? They'll try to use that trend line there. They'll sell off that. The bottom line is, if it's a real deep pullback down below the 29.93 area, we know we're still bullish overall, but we have to give the respect to those bears. Let them try once, let them try twice. Then I'm looking for that nice strong signal to buy into those stop losses as we go. So those are two buy patterns to watch for as we get the pullback. What about going higher here? Which patterns can we use going higher? Can we buy this going higher? We can. Very similar to what we talked about on the crude oil, right? It's a 1, 2, 3 breakout. Strong move up. Remember, get that separation, right? Get that separation off the moving average. That will give you the green light. You'll notice they haven't done that yet already, right? They haven't done that so far. So if we can get up 1, 2, pull back, 3, jumping off the moving average, that's exactly what I'm looking for. I want to mark up now that high, mark up that low. Now I know where I want to be a buyer, and I'm buying off the low of that 1, 2, 3 breakout into hidden channel pullback. 1, 2, 3 breakout into hidden channel pullback. Now, also, too, is that 2-try breakout, right? Strong move up, profit taking for the bulls, bears come in to sell it, and of course, 2-try into that breakout from here. Keep in mind, this 2-try breakout is all about the actual breakout itself, right? It needs to be very strong. In fact, like I always tell you guys in the newsletter, it needs to be so strong that your jaw kind of hits your keyboard, right? You go, whoa, that's a big, strong breakout. It needs to be again, I call it a FOMO breakout, right? It needs to be something that triggers that fear of missing out and everybody involved in this market. So again, strong move up, profit taking first, higher high, bears come in second, proper entry signal, right, and buying. What you need is you need to see that higher high though. Right? You've got to get that higher high on there. Higher highs are critical because that's where bears are coming in. And you're going to need those stop losses of those sellers to fuel that market as it goes higher. So now we've talked about the buy side here. How about the sell side here for tomorrow? How do we sell this? Can I sell up top here? You can, but you got to do it carefully. How do we sell it? Well, first of all, I always want to sell where? At resistance. So, of course, I want to try to use this trend line here. Right? That trend line, if I can get a draw there, not a very steep trend line, right? But that trend line right there will definitely be a great spot to look. Now, as we go higher here, it's not a bear market. So I have to give the bulls the benefit of the doubt. I'm going to let those bulls try twice, right? Try once, try twice, and then I can sell it back down in from there. Now, one thing about a counter trend trade like this is I like to look for basically a trap high, right? It's a nested failure. It's a 1 try for the bulls. It's a 2 try for the bulls, but I'm watching for a trap high on this. And that trap is my way of covering my behind when I'm going against the overall trend. Right? Overall trend is bullish. There's a lot of optimism right now, the U.S. and China trade talks. I really don't want to try to sell this market right now unless I get a good old setup off that high. The most important thing, let them try once, let them try twice. But again, when you're trying to go against that momentum, you really want to try to use that trap high up there. That trap will keep you out of trouble. That way you're selling nice and high and you're not selling the low while it drops lower. That's called a nested failure with a crown reversal trap high on that. That will be the way I'm looking to sell this market here for tomorrow. How do we go lower here and sell? Strong move down. Can I sell that pullback? No, right? If you learn anything from me today, right, do not try selling a breakout pullback below the low of that range because those breakout pullbacks will oftentimes fail and run right back up into that trading range. So instead of trying to sell that breakout pullback, I'm going to wait for that move down, get that moving average coming over, and then try to get that 1, 2, 3, right? So 1, strong move down, 2, pull back to the moving average, 3 is that strong move off the moving average, mark up that low, find the channel high, and we're selling off that channel high. Where's my target for that tomorrow morning? It's right back to this range, I would imagine. If these bears can take control over this again, we'll probably end up cruising down to that 29.80 area eventually, right, sooner or later. So we'll look for that bear, right, that bear move. But again, you've got to make sure it turns bearish first. So again, quick recap here, looking for a failure pattern into a pullback pattern, going back up into that range, buying into the stop losses of those breakout pullback sellers. And then, of course, if it really runs lower, it's that nested failure, right? Give the bears the benefit of the doubt before we buy into their stops. It all depends on the size of that pullback, the strength of that pullback. As we go higher here, 1, 2, 3 breakout, mark the high, mark the low, buy off the low. And of course, how do we sell it? Crown reversal, trap high off the high. Again, be very careful selling this market right now. Don't get too aggressive trying to go counter trend on this. I know some of them work, but a lot of times they don't. So be very, very careful trying to go against that trend, or it's a 1, 2, 3 breakdown. Mark up that low, find that channel, and yes, selling off that channel high from there. Don't forget, guys, every morning, Monday through Friday, 8 o'clock Eastern time, we do it all together in our trade room. I'd love to have you there with me trading the strategy with us tomorrow morning at the opening bell as well. And don't forget, all these patterns I'm talking about right now are covered in that free trading class that I mentioned in the upper right-hand corner, so make sure you get registered. Over on the Nasdaq here tonight, Nasdaq, again, much like the S&P, is battling through rollover here for tomorrow. What do we know about the Nasdaq? Well, we know they got the big pendulum swing. I didn't see this coming this week. They really got that whole pendulum swing, and it really is amazing. We talked about this. What was it, Tuesday? We talked about this week. We said, you know what? It'll be a pretty big move, obviously, if they can get that full pendulum swing. But they sure as hell got it. They got the pendulum swing all the way up there at 79.80. We know that level now is a major level of resistance. So kudos to you guys for leaving that final runner today up to that pendulum swing. What else do we know here? We know we get a bull market. We know that bull market is sideways here inside of a range. We know that range-bound markets are balanced. They tell me to buy low. They tell me to sell high and avoid the middle. We do want to buy underneath this range because we know it is a bull bias. I want to buy at support. I got my support levels marked up below, looking for a buy setup here below that trading range, just like we talked about on the S&P. What is interesting, though, here on the Nasdaq, which is not on the S&P, is the S&P has an expanding triangle, right? The S&P is an expanding triangle. The Nasdaq spike and channel. Higher highs, higher lows. Now, the giveaway, just in case you're wondering, why do I call this a range instead of a spike and channel? The giveaway is that level right there and that level right there. A real channel would rotate back and forth. Okay, that's what qualifies a channel. Okay, that's why you'll hear me say I'm looking for channel rotation. The market needs to rotate back and forth inside that channel to tell me this is actually a channel. The fact of the matter is we didn't have the rotation here or the rotation here. That tells me this is a range. And anytime I have a range, the range takes center stage, always. Anytime there's a range on that chart, the range is the king of the chart or the queen of the chart, right? Whatever you want to call it. So we know we got that range there, right? We know we got that range. And of course, I want to buy underneath that range. So that's how I know, yes, there is a channel there, but the range is going to be the most important clue. That's where you want to really structure all your trades off of for tomorrow. So knowing that we have, right, two main components here, I've got the bull market. We know we're in a range. We know we have, again, a little bit of a spike in channel here. Now, a spike in channel, I forgot to mention this earlier, a spike in channel pattern tells me, look at the base of that channel. So, for example, when we see a market go higher and then pull back, make a new higher high like this, that strong move up, that's the spike. The higher highs, that tells me now spike in channel. What I'll do is I'll mark up that high, mark up that low, and I like to use the law of three, and that is 1, 2, 3. 1, 2, 3, right? 1, 2, 3. 3 pullbacks, 3 legs in a spike in channel. Okay, once you get those 1, 2, 3, then mark up the base of that channel, right where that channel runs right into the spike. Take the first pullback, that creates my buy zone or my battle zone, right? And now we know where I want to be a buyer, right? I'm going to buy underneath that channel. So again, we know we've got that spike in channel. Okay, I've definitely got my 1. Okay, my 2, my 3, even 4 here right now. So we're ready to go back down to that low here. I've got my spike in channel coming up. I've got my channel right there. I mark up the first pullback along with the base of that channel. And that gives me this little sweet spot down here between 79.07.5 and 78.98.5. Now, I wouldn't get too wrapped up in the absolute specifics on this. It's just this area. Right? This area now is where I want to be a buyer. And you'll notice that goes right along with having the range expansion levels right above and below. So I really like that area here on that chart. I've also got that measured move waiting down there at 7,900. Measuring 1 leg, measuring 2 legs. Another great spot there, right, for an area of resistance or area of support, excuse me. So now we know the lay of the land here on the Nasdaq. What's the plan to be a buyer, right? We're definitely bullish. I want to be a buyer. What's the best way to do it? Well, first of all, I want to get down into my support areas. One of the classic situations, one of the classic strategies in a range day is to find the highs, find the lows, and just focus on trading those edges. So an easy way to think of this is anytime I know I have a range, find the tops, find the bottoms, and trade those edges. So I want to get down into those edges, right, of the trading range. And much like on the S&P, it really has a lot to do with how the market pulls back. For example, if we see a modest pullback down to the measured move, 7,900, what I'll do is I'll look for those sellers to try to sell in that breakout pullback pattern. And my favorite type of breakout pattern is a failed breakout, right? Failed breakout pullback and back up into that range. Now, if we really run going lower here, the market won't necessarily be a bear market yet, but it will definitely give the bears a little more courage. So what you want to do is you want to let them try once, let them try twice. Once we've got these bears trying a couple times now we can look for that buy going back up into that range. So hopefully you can see the difference there, right? A modest pullback into my first battle zone, right? That modest pullback, moving average comes over. Let those let those sellers try to sell that breakout pullback pattern. Now we know where their stops are, and we can buy right into those stops. Or deeper pullback, it's a nested one try, two try. Again, higher highs there because you want to make sure the sellers fully commit twice. Okay, the first round of sellers will be at the short-term pullback. The second round of sellers will come in shortly thereafter. You want to give all those bears, you want to let all those sellers wrap that rope right around their neck. That way, when they fail, it'll slingshot right back up into that trading range. And a lot of times, we'll end up getting that failure into pullback combination, for a nice double dip setup. All right, so failure pattern off the low. Again, nested failure into that bull breakout, right? That breakout pullback going back up into that range. Remember, the range is the magnet. When you have a trading range, the range is the magnet. You want to go back up into that range. Now, as we go higher here, how do we buy the breakout? Again, we can't just take a strong move and call it a breakout because we know better than that, right? We see a lot of strong moves that did not break out of this range. So what I need to do is I got to go up. I want to get back to these highs. I want to see the moving average coming over. I want to see us hold that pullback and jump. Remember, the key is to get good separation off that moving average. That will tell you this is now a bull market and it's above the top of this range. Prices now are exploring new prices. Buyers are buying high now. Something must have changed. Now we can confidently trade along with them until we reach the next big objective. I'm going to mark up that high, find my channel, you got it, and to buy off the low of that channel. Now a heads up on this, right? That buy setup is oftentimes a failure into a pullback combination setup. And again, I'm talking a lot about these combination patterns, failures into pullbacks. You'll learn all about those inside the free trading class, not to worry. But imagine kind of blowing up that area right there, right? If you were to zoom in on that area, okay, you're looking for a seller failure into bullish pullback below the moving average. All right, guys. And again, we'll talk more details of the exact setups inside the free course and obviously inside of our trade room every morning, Monday through Friday, 8 o'clock Eastern time. All right, guys. So that's the setup for the buying off the low, looking for the breakout going higher. How do we sell this market right now? There are really two spots to be a seller. They're both around the edges, one at the top, one at the bottom. To be a seller right now, I want to be up around the highs. And again, what you want to remember is the best trades in a range are going to come around those edges, right? So find your edges up here, right? There's that high up there. The best trades are going to come off of that high. Okay, if you try to short this thing too close to the range, you're going to probably lose money that way. They're going to try to get that high hit. All right, so be very careful being too aggressive, too close to the range. Remember, there's a much better risk-reward ratio for taking that crown reversal pattern off the high, right? Think about it. Which trade would you rather take? Would you rather take a trade where you can risk small to earn large? Right? That's a nice small amount of risk you can take for a much larger amount of reward. Or would you rather go up and try to do it right here? See, that's not very comfortable right there. Yes, the risk is small, but the reward is also very small. So the most important thing about trying to sell this Nasdaq right now is to get it up, let the buyers try once, let them try twice, get that trap, right, and sell it right back down. Stay out of that middle, right? That'll be nothing but trouble for you guys, right, inside that range. Now, how about a short going lower here? Again, you got to get that 1, 2, 3 breakout. 1, 2, 3 breakout. Strong move down, pull back to the moving average, mark up that new low, Remember, once you get that separation off the moving average, that's going to be your cue now. Mark up that new low, find that channel, and we know we're looking to sell now off the top of that, right top of that channel. And just like the S&P, there's a lot of open space here to the downside for us, right, to tumble back down into that trading range from earlier on this week. So lots of open space there if these bears can get their hands on this sucker. So looking good here to buy the low. It all depends on what type of pullback we get, how strong it is. Stay out of the middle, buy low and sell high. Over here on the gold tonight, the yellow metal. Now, of course, in last night's newsletter, we talked about that rising support trend line. Right, bears trying once, bears trying twice. We're definitely keeping an eye on that for oil tomorrow morning. That's the same exact pattern we're looking for tomorrow, right, on the oil. So keep that in mind. As I mentioned earlier, we know we had that big bull move up here on the gold. We had that big bear move back down. And you can see, right, the 1, 2, 3 reversal, mark up those lows, mark up that high, and sell up around the high. You see a good example of that gold with a 1, 2, 3 reversal into a hidden channel pullback. Well, now we're obviously bearish, right? Very, very strong move down here. I'm marking up, of course, my one leg, my two leg. I can see support here coming in. I know we're bearish. I want to be a seller on this gold right now. And so what I'm doing here is trying to find some levels of resistance. I've drawn off of this low, but up to that high. I like this area up here at the top of that channel. My biggest concern, though, is, and again, you'll also notice too, I've got reversal lines here. Prior swing low, prior swing low. This is a great spot up here, 15.13 to 15.16. That area is definitely on our radar to be a seller tomorrow. The problem is we've got that trend line coming in. So if we do see that pullback, it's going to be very tricky here for me just to look for a seller failure pattern to sell into those stops because of that rising support trend line. In fact, if you want to be a buyer and try to pick a bottom on this, that probably won't be a very bad spot there if you can see a nice strong snap higher here from those buyers. Okay, so if we do pop back up, bears, of course, to sell back in, rising support trend line. Great little, again, it will be a very much of a counter trend trade at that point, but a very opportune time to pull that trigger going higher. What I'm looking for, though, is tomorrow is I want to see us go up, and I want to see that trap pattern. The best way to avoid selling into a rising support trend line is let those buyers try once, let them try twice, get that trap, and that trap will allow you now to sell without having to worry about selling into that rising support trend line, right? Traps are very, very common patterns when you've got a concern about rising support. So again, we know we're bearish. We go up into our sell areas. Moving average comes over. Buyers now, again, the aggressive short here is just simply that buyer failure pattern and that tumble back down. What I'm looking for, though, is to avoid trading into that trend line is a buyer failure in combination now with that trap setup to avoid selling into that rising support. Now, what if I'm wrong? What if we don't get that pullback? What if we run back down into that trading range? You've got to remember now we're back into that range from yesterday. And if we can get back into that trading range here, we're running into support. We're back in the range. We don't want to trade inside the range, right? Because that range is going to be a real hairy area there to be trading inside of. What I'd rather do is get back into that range and then try to use that trend line now as a level of resistance. Now remember, the best way to sell when you're inside of a range is to look for failed breakout pullbacks, right? Look for the market to rush up. That moving average now will come over. The buyers will try to buy off the moving average pullback. And of course, we'll look to sell those right into those stops for that move back down. So really two reliable ways here on the gold right now. One is up with a trap high to avoid selling into that rising support, or we run lower into that range, treat it like a range, bear bias into a range. I want to go up above the range. Now remember, the range is the magnet area. Let it go up. Let those buyers now try to buy that pullback. Breakout pullbacks usually fail, and we'll sell into that breakout pullback failure back down into that trading range. Now, we might keep going lower from there too. There is a chance here. The one thing I want to remind you guys about gold tomorrow, though, is we've got that big low. Remember that big low from earlier this week? That big low down there at 1488. So one scenario that you may see here is we may see it run lower through that range, bounce off of that support at 1488, and because I want to buy underneath that range, remember it's a range here, it's sell high, it's buy low, because I want to buy underneath that range. What's the best way for me to buy in a bear market? You got it, crown reversal. One try for the bears, two try for the bears, trap low, and back up into that range. Remember, when you're going against the trend, you want to, first of all, give those, in this case, give those sellers the benefit of the doubt. Let them try a couple times, once and twice, and we can buy now, right, with that trap low going back up into that trading range. I always like to look for a trap whenever I'm going against the trend, because that's going to be the only safe place so you're not buying high, right? Because I buy high, if I wait and I try to buy up here now, right? If I buy as the market's going higher now I put myself in a position where I'm susceptible to the next move lower. Right, you're buying pretty high in that situation. So to avoid that problem, right, to avoid that very common stop run that you get by trying to buy as the market's going higher, buy as it goes lower. I know it's counterintuitive, but that's what required. That's what we're required of as traders. Right, we got to buy as the market's going lower because that's going to protect us. Small stop, big target. Very desirable position at that point, risk small to earn large, right, off of that low. What other buy patterns could I use here? Another buy pattern, right? 1, 2, 3. Absolutely. This is definitely something we're watching for tomorrow, right? That 1, 2, 3 reversal. Mark up the highs. Find your channel. You got it. And we're buying off the low of that channel because, again, anytime we see a strong move in one direction, who knows, right? This could pull out of nowhere and try to make a run back up to retest the high. Probably not going to happen, but hey, who knows? We got a lot going on in this world right now. This could easily jump up, right? The bears say, nah, I'm not going to touch this. I don't want to sell into that trend line, right? The buyers now have their shot. They take it and they take control. Once those buyers take control with that pop off the moving average, now we mark up the high, mark up that low. We're buying off of that low now, off that hidden channel pullback. Target is back up to retest the high. So gold's looking pretty good there. I like the sell side. It's a little bit of a thread the needle though because of that rising support. Remember, if we end up back inside this range, sit on hands. Buy it under the low with that crown reversal or that 1, 2, 3 reversal with that pullback back to retest the high. Last but not least here, over on the euro, the mighty euro. That's for certain. It was definitely a mighty euro this morning. We knew today, of course, was the ECB announcement, so it's not a huge surprise that we saw such a big move higher here. We did see that strong move up into what I would call a spike in channel. Spike and channel patterns love to give us those deep pullbacks right into those buy zones. You can see they already got it once there. They may try it one more time as well, right? You'll notice they got that kind of deep pullback in as well. That's a spike and channel on it. What I really like though is this trading range, this strong move up right into that trading range. Now that anytime we see a range on the chart, we know the range takes precedence. So what do we know right now? We know we're bullish. We know we're ending the session here pretty much going sideways up here, moving average going flat. What do we do with a range? We buy low, we sell high, we fade the breakouts, right? We trade into those breakout pullbacks, right? Not with them. We trade against those breakout pullbacks. And so knowing that I have my range up here, I'm looking for levels of support below. What I like is this trend line coming up. What I really like is the fact that it's a small price action gap right there. It's a little bit tough to see, but you can definitely tell it's there. It's the closing price of one candle and the opening price of the other. They don't match up. That is a price action gap. And what that basically means is a price action gap, at least in my point of view, is the velocity of the market was so fast right there that I'm sure a lot of people probably didn't get filled. probably a lot of buyers who are still waiting to get their orders filled. When the market pulls back, you'll see buyers come roaring back into the market, usually right around those price action gaps. So knowing that right now, I like the range. It's bullish. I'd like to be a buyer. I think you're going to definitely see these sellers, right, try to fill that gap. Buyers are waiting down here. I like the gap area. I like the rising support trend line. All we need now is to get that market going lower, get that, right, get those breakout pullback sellers to commit. We can buy, of course, now into their failure. If we get lucky and we get a good pullback on it, we can get that pullback. Just remember, though, you want that failure into that pullback pattern, that failure into pullback, and then run back up as long as you're staying out of that middle, right? As long as you're staying out of that middle. Now, we may get an even deeper pullback, right? We may get a real sharp pullback. If it really, really pulls back nice and deep, right, into these levels back here, now we know this bears, they mean business. It's not exactly a bear market yet, but it could be. Give them the benefit of the doubt, right? 1 try for the bears, 2 try for the bears. You're getting this, right? It all depends on the strength of that pullback as we pull back off of that high. So again, it's your standard breakout pullback failure into bull pullback back up on a modest pullback, deep pullback. It's the nested, the 1 try, the 2 try, that nested failure, and we'll run back up from there. All right, hopefully that all makes sense there. It all depends on the size of that pullback. If we go sideways, sit on hands, right? If we chop around here overhead, sit on hands, wait for the breakout pullback to fail, and buy into those stops. What if the market goes higher here? If we go higher, where are we trying to go to? We're probably trying to go to that next big round number at 1,200. That's a ways away, though. Okay, so if we do go higher here, what are 2 patterns? 1, 2, 3 breakout, 1, 2, 3 breakout, mark up the high, mark the channel, and we're buying the low of that channel, right? Same pattern there. Or the FOMO breakout, strong move up, real strong. 1 try for the bears, 2 try for the bears. We're literally buying into the stop losses of that second try for those sellers, right? 1, 2 try breakout pattern, right? Breakout, 1 try for the bears, 2 try for the bears, strong signal candle. You need to wait for that second try because you need to have those stop losses there to fuel that market going higher. And again, I realize I'm just drawing on the screen right now. I have hundreds of hours of examples of these setups inside that free trading course. Again, linked up in the upper right-hand corner, big red button below the video tonight here on the trading blog. How do we turn bearish here? What's a bear market look like? 1, 2, 3, right? So we pull back, strong move down. We pull back to the moving average. We jump off the moving average, right? That's the key. Remember, it's not enough just see a strong pullback. Strong pullbacks fail all the time in range-bound environments, especially in trending ranges, right? In a strong trend up, this thing pulls back here. The odds are pretty good. They're going to fail and go right back up into that range again. Okay, so we can't just assume these bears take control just because we have a strong pullback, right? Failure into pullback and back up into that range again. Again, 1, 2, 3. Got to get that separation off the moving average, mark up the channel, find that hidden channel, and we can sell off that hidden channel high. All right, guys. Excellent day today. Hoping for another great day tomorrow. Don't forget, Monday through Friday, we trade the strategy together every morning in our trade room. And as always, guys, please don't forget to join us tomorrow morning, every morning, Monday through Friday, 8 o'clock Eastern Time. Get registered as an advanced member. You can register for membership by using the big red button right below the video tonight here on the website. If you're on YouTube, check all the links in the description of the YouTube video. If you're on the blog, there's a big blue button below the video tonight on the blog. If you're on the homepage right now, you want that advanced course. The advanced course will give you the unlimited access to our video classes, our trading schedule, and of course, all the bells and whistles. You can learn more about that right on the website there at schooloftrade.com. And as always, don't forget, if you're not ready to be a member yet, If membership is not quite ready yet, grab that free trial. The free trial includes your free trading course, a free pass to our trade room, along with hundreds of hours of great examples of how these setups work in our favorite markets. Grab that free trial, join the free trading class. I'll see you inside the member section here of the website. And as always, guys, keep in touch. Drop me those comments in the comments section below. Call me anytime you guys have any questions. We'll see you guys Monday through Friday in our trade room, 8 o'clock Eastern time. If not, we'll see you guys in the next edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.